Well, good morning, Jagendra Rana here. Topic for our discussion today is Insurance Amendment Bill. The Insurance Amendment Bill. Composite licensing and the proposed increase in foreign direct investment to 100%. Key amendments under the Insurance Laws Amendment Bill 2022 are likely to be tabled during the upcoming monsoon session of Parliament. India may introduce changes to FDI regulations affecting sectors from e-commerce to pharmaceuticals. However, while the specifics of the amendments are still uncertain, an increase in FDI to 100% in the insurance sector is highly likely to take place. Composite licensing will allow insurance companies to sell both life and general insurance products. Under a single entity, streamlining operations for insurers. After March quarter earnings had expressed, officials after March quarter earning has expressed hope that composite licensing would be implemented during the monsoon session. With plans to move forward with its proposed IPO simplification. This comes at a time when Life Insurance Corporation of India has reportedly signed a strategic deal with Manipur Cigna Health Insurance, and while details of the agreement are yet to be disclosed. The move signals LIC's intent to expand its footprint in health insurance. So during the union budget this year, Centre had announced a hike in the foreign direct investment limit to 100% to attract more global players and capital into Indian insurance. This move, also a part of the Insurance Act, is likely to be introduced in the upcoming session. The Insurance Amendment Bill is also expected to simplify the capital structures of companies by proposing key reforms including composite licenses and increasing the foreign direct investment cap. So the amendments also propose flexible capital requirements by removing fixed minimum threshold currently at rupees 100 crore for life and general insurers and rupees 200 crore for reinsurance companies, as well as grant for autonomy to IRDAI. The Insurance Amendment Bill, which proposes increasing foreign direct investment in the insurance sector to 100%, is expected to be introduced in the upcoming monsoon session of Parliament. So the draft bill is ready and will soon be presented for Cabinet approval. Following this, the Department of Financial Services under the Ministry of Finance will initiate the process to introduce the bill in Parliament. The monsoon session of Parliament typically begins in July. Finance Minister had proposed raising the foreign investment cap in the insurance sector from 74% to 100% during this year's budget speech. This move is part of broader financial sector reforms aimed at attracting more foreign investments and enhancing the sector's growth. So the increase in FDI would be applicable to companies that invests the entire premium in India. Additionally, the finance industry plans to review and simplify the existing guardrails and conditionalities associated with foreign investments. The Insurance Amendment Bill seeks to amend several provisions of the Insurance Act 1938. Key changes include increasing FDI in the insurance sector to 100%, reducing paid-up capital requirements and allowing composite license. The bill also proposes a shift away from the current exclusivity model by allowing agents to sell products from multiple insurers. In addition to amending the Insurance Act 1938, the Life Insurance Corporation Act 1956 and the Insurance Regulatory and Development Authority Act 1999 will also be amended as part of this comprehensive legislative exercise. The amendment to the LIC Act will grant the LIC board greater autonomy in operational decisions such as branch acquisition and recruitment. The proposed amendments are designed to promote the interest of policyholders, enhance financial security and facilitate greater competition in the insurance market. The bill aims to improve the efficiency of the insurance industry, simplify business operations and increase insurance penetration. This is aligned to achieve insurance for all by 2047, boosting economic growth and job creation. Impact on the insurance industry. The changes in the Insurance Act 1938 will reshape the regulatory framework of the sector and encourage the entry of new players, which is expected to drive growth and enhance penetration. Currently, India has 25 life insurance companies and 34 non-life or general insurance firms. These changes are anticipated to create more job opportunities across the country and contribute to the overall development of the sector. The FDI limit in the insurance sector was last raised in 2021 from 49% to 74% in 2015. But the government has increased the cap from 26% to 49%. The proposed 100% FDI limit is expected to further boost foreign investment and bring in more global players to the Indian market. Now, the insurance industry of India is on the curve of some big reforms with the coming of the Insurance Amendment Bill 2025. The Insurance Regulatory and Development Authority of India is currently working on a regulatory framework to ensure a smooth transition once this bill is passed by the Parliament. The regulatory body has established a high-level committee under the leadership of Axis State Bank of India. This committee has also boarded representatives with different expertise, such as leaders from the life and general insurance sectors, legal experts and banking officials. It is set to prepare a draft of regulations vis-a-vis the proposed amendments. Subsequently, the report noted that the committee's focus will be on framing operational guidelines and not recommending any modifications to the amendments. So the goal is to ensure that the new regulations align with the broader objectives expected out of these reforms. Additionally, it is being said that the government might table the bill in the parliament during the monsoon session. The committee has been established so that the IRDI is prepared with a framework by the time the insurance amendment bill is brought into motion. The bill aims to bring reforms in the insurance laws that will ensure more accessibility and affordability of insurance for buyers across all spectrums, with an eye on promoting the expansion of the insurance industry. The three key changes under this bill are 100% FDI, raising the limit of foreign direct investment in the insurance sector to 100% from the existing 74% cap, reducing the paid-up capital requirement for insurance companies, composite license, bringing a composite license for insurers which will allow them to offer both life and non-life insurance products. The existing rules require a company to have separate licenses if they want to sell both life and non-life insurance products. A composite license will consolidate their operations while also reducing compliance burdens and cost of insurers. So other than these key reforms, these amendments also intended to bring a more liberal setup for insurance agents in India. Currently, insurance agents can only represent one insurer in each category, namely life, general and health. This amendment will allow agents to partner with multiple insurers across categories. However, the IRDAI will have to ensure that these new partnerships don't lead to a conflict of interest. So with the establishments of this committee, the regulator is working on setting compliance and operational guidelines that would set a benchmark for the best practices in the industry. So the bill is likely to be placed in the House in next monsoon session. And the preparations of IRDAI are almost over, because the Centre may introduce the much anticipated insurance amendment bill, with officials indicating that the draft bill was in the final leg of internal deliberations. So the bill is likely to be put up for approval of the Union Cabinet by April end. Now, since the April end is already over and monsoon session is likely to be in the month of July, then only it is possible. So the bill is expected to bring significant reforms to India's insurance sector, including raising the foreign direct investment limit from 74 to 100% for companies that reinvest premiums within the country. This move comes at a crucial time, as the government is in the process of selecting a new Insurance Regulatory and Development Authority of India chairperson following the end of Devashish Panda's tenure. The government has invited applications for the position of the next chairperson of the IRDAI. So the bill is likely to be, the bill amendment 3 key legislations will be approved very soon. Thank you very much.